Hello everyone, welcome back. Welcome back to the chat room. My name is Ed Ponzi. It's great to be here with you, speaking to you on a Monday evening late in July. It's Monday, July 28th, and we've got some questions for you. A lot of Forex questions, and pretty much all of them pertaining to the New Zealand dollar. I'm going to get to that in just a second, but first I just want to give you a position update on our Euro-US dollar trade, and we're going to update the stock trades at the later end of the class. But here you can see, right, the green line was our entry. And so obviously we entered, several days ago, and the price really didn't move too much, and then it finally moved in our favor, and it did not touch the blue line. Now, it missed the blue line, our target, by 5 pips. I don't know if you can see where it says low, 134.20. That's 5 pips above our target. And if you want to be honest, the offer has to get to 1.5. So maybe it missed by 6 pips because we're looking at a chart that runs off of an average of the bid and the offer. So 5 or 6 pips, let's say, we missed our target. But I'm not freaking out. Now it's very, you can see our stop is really far away compared to our target. Even at this point, our target is 22 pips away. Our stop is over 100 pips away. This was our plan, and I'm sticking to it. Things are moving slowly, so nothing major has really happened on this trade yet. It would be wonderful if we would hit the target, but I even feel it, and I feel that impatience within me, that I want to do something. I want to just say, oh, close out the first part of the trade. But I have to maintain discipline. I can't just do things because I feel like it, okay? And, to be honest, there have been times where I do things because I feel like it, but I have to fight that urge. We all make mistakes in trading. There's nothing wrong with making mistakes. The problem comes when we make them over and over again. I think it would be a mistake for me to deviate from the plan. Now, if the price comes up, that doesn't mean that I'm wrong or that I was wrong to stay in. You cannot control what happens on any trade, on any one trade. It's what you do consistently that's going to make a difference. So what I do consistently is I set up the trade, I set up the entry, the stop, and the exits, and then I follow the plan. The plan is to close 1/3 of the trade at 134.15. It's 22 pips away. 22 pips used to be like a stone's throw. It used to be very, very close, right? Now 22 pips seems like miles away. But you know what? One thing we can't deny is the trade is going in our favor. It's done well for us. It's continuing to do well for us. So I'm not going to fight it. I am going to stay the course. Now, if at some point there may come a time where I change that, what would change my mind? Okay, well, I'm not going to speak to you again for another 3 days, let's assume, right? Because, I speak to you twice a week, so that's every 3 or 4 days. So let's say I don't speak to you for 3 days. And during those 3 days, the price is, say, 10 pips away from my target the entire time, and it just won't get down there. That might be enough to get me to change my mind, but you know what? It's not enough for me to change my mind right now. We'll cross that bridge when we get to it, but we're not there yet. So I am, for now, staying the course on Euro-USD, which is short. I am staying the course on Euro-Swiss, which is long. I am down 2 pips on this trade. This is one, I mean, we talk about low volatility, but the volatility on Euro-Swiss is extraordinarily low. The average true range of Euro-Swiss is 11 pips a day. 11 pips a day! Now, look, that's incredibly low, isn't it? I mean, is it just my imagination? I'm going to take you to the weekly. The weekly ATR is only 32 pips per week. Up here it was 550 a week. Now it's 32. Volatility is very low, but it doesn't really change how I go about my business because you know what? Volatility won't stay low forever. At least we don't, I don't think it will. I guess anything's possible. Maybe volatility will stay low forever. I don't know, but I doubt it. Here's the pound-yen trade, which, at one point this was a nice triangle, and now it just looks like sideways city. But this was, don't forget, this was a nice triangle, and it still is, isn't it? That's a nice ascending triangle. Take that blue line, that black line rather, and intersect it with the green line. That's an ascending triangle that broke out, pulled back, but it's still pretty legitimately an ascending triangle. We're down 50 pips on the trade, but I'm collecting interest on this every day. Hey, I might have to hold this the rest of my life, and if I do, that means I'm going to collect interest every day for the rest of my life. Hopefully that'll be for many, many decades. But it wouldn't be the worst thing that ever happened to me if I was in this trade for the next 50 years, because I'm getting paid to be in the trade. And as I said, look, things may seem quiet now, but that'll change. Boy, that's the thing about trading. Just when you get used to something, that's when you can kiss it goodbye, right? So this low volatility is something it's like the weather. Everyone's complaining about it right now, but when the weather changes, they'll complain about the change. Okay? Now, let's talk about New Zealand, because this is the currency that everyone is talking about. So we're going to get rid of that ATR. What exactly happened to the New Zealand dollar? Because I got so many questions on this. Boy, is that ugly or what? But it's actually coming into support, isn't it? Right. This used to be a good support area. It's about 85.15 on Kiwi. It's getting close, and notice as we get close, the price is doing what? It's losing its momentum. The candles are getting smaller. The price is no longer falling. Maybe it's going to reverse. I don't know. It might be worth a shot. You never know. But first, let's talk about that's not something I'm going to get involved in, because you have New Zealand is actively trying to drive this lower, actively working hard to drive it lower. Okay. So what happened is, right here, they actually raised interest rates. And the price, most people would believe that would drive the price higher. But here's the thing. They had telegraphed that move months in advance. Nobody was surprised by the fact that they raised interest rates. Everybody was surprised by the fact, well, everybody was surprised by the things that were said after they raised interest rates. They said, this currency is overvalued and unsustainable. Now, I'm going to show you this on an intraday basis because it's shocking. People think that currencies don't gap during the week. Look at that monstrous gap on Kiwi. That's going to gap from 87 down to 86.20 or so. That's going to gap 50 pips, 80 pips or so. Look at the time of day. The time of that gap is 5 o'clock New York time. I want you to think about what happens at 5 o'clock New York time. Well, the biggest trading center in the world is London. When it's 5 o'clock New York time, it's 10 o'clock London time. In London, they're done, right? It's 10 o'clock at night. They're getting ready for bed. In Asia, when it's 5 o'clock in New York, it's 5 a.m. in Tokyo. They're not awake yet. So you've got London's going to bed. Tokyo's not awake yet. And what's happening in New York at 5 o'clock? Everyone's going home. So if you were going to make an outrageous announcement in an attempt to drive the New Zealand dollar lower, the perfect time to make that announcement would be 5 o'clock New York time, the quietest trading time of the day, the lowest level of participation, and that's exactly when that announcement occurred. Isn't that something? Okay, so it's what was said. And so just to be clear, because that was the question that we keep getting, is even though I think we talked about this before, I said you mentioned that New Zealand raised interest rates, and as a result, New Zealand yen gapped down. That's not true. This did not gap down because they raised interest rates. This gapped down entirely because of the comments that came afterward. Okay. These type of gap downs, and going on with the question now, this type of gap down is mostly common on Sundays when markets first open. Right, because let's say a market is closed all weekend. Well, first of all, there are gaps on the weekend. They're not usually this big, though. They're usually a lot smaller. But why does it happen on the weekend? Because let's say the market closes on Friday, and then during the weekend, a war breaks out, or a plane gets shot out of the sky, or something horrible happens, which, by the way, is very much similar to the world we live in right now, right? Well, could those events affect currencies, maybe even in ways that we don't anticipate? They absolutely could. And if those events occur over the weekend, when are they going to be priced into the market? When the market reopens on Sunday night, New York time, Monday morning, Singapore time. Okay, that's when it's going to be priced in. So the gaps that do occur mostly occur on Sunday night, my time here in New York, which would be Monday morning if you live in Asia. Okay, but those gaps are usually not this big. Also, whenever these type of gaps occur, does the market eventually correct itself? There are people who believe, just to answer that question, there are people who believe that all gaps are filled. In fact, one of my early mentors was a guy named, we used to call him Dollar Bill. And Dollar Bill loved to say, Ponzi, all gaps are filled. Got it, Ponzi? All gaps are filled. But it's been my experience that most gaps are filled, but not all gaps are filled. And if you're waiting for this gap to fill, you might have to wait a long time. Okay? That's not necessarily something I would play with. If the price were to come up to this point right here, at about, say, 86.25, then it might become a buy because there's a vacuum here. There's no orders were placed between these points. So there may still be live orders resting in here. So in other words, would I bet on this gap to fill now? Now the price is at 85.80? No. But if the price comes up to 86.25, then I might place a trade betting on that gap to fill. Because gaps can fill very quickly, but the gap cannot fill when it's so far away from the gap. This needs to come up a good 50 pips, and then we can talk about, is it going to be a gap fill play? Okay, great question, by the way. That's from Francis. So we hope you're enjoying the course and all the material, Francis. Okay, and the question was very clear. It was an excellent question, and we hope to get more questions from all of you. Do please send your questions in to info@edponzi.com, and we will get them. We try to get to every single question. We do try. Here's another one. It says, thanks, Ed, for FX Ed. And you know what this one's about. This is about the euro pound because we still have somebody making bank on euro pound. I'm going to get the indicator up here. This was a moving average, exponential, not the 10, but the 20 was money on euro pound. So we like that. And it looks like our friend, who I think shorted it way up here and is riding a huge win, missed it here, if you recall, but shorted some more right here. Good job. And you know what? And it hit there, and what happened? It dropped again. So he's saying, I entered another position on euro pound. I am up 27 pips on the new position. Overall, I am up 266 pips. Not bad in a quiet market, all right? thanks to you, this is a lesson well learned. It's easy. You changed my mindset. I just follow the rules, and I do not predict. Ed, you're the best. Thanks. Aw, thanks a lot, Cobus. That is a very awesome statement. We really appreciate it. Now here comes a question. Can you please explain the hedging of a position a bit more? How could I hedge euro pound if need be? Okay, well, you're already short the euro, right? You're short the euro against the pound. So there's two different ways that you could hedge this. But I don't necessarily think you should be trying to hedge this, unless there's a great opportunity that you see. The way that you would hedge this, you are currently short the euro and long the pound. So you could hedge this either by going long the euro against a different currency or going short the pound against a different currency. Now, the thing about going long the euro is it's hard to find a currency. It's getting beat up across the board. Euro USD, I wouldn't go long that. Okay, euro pound we already looked at. How about euro Aussie? Downtrend. Maybe euro New Zealand. Well, no, it's still a downtrend. I'd probably short this rapidly. And it's hard to find. There's really no currency pair. Euro yen. I can't find anything that's in a downtrend. I can't find anything where it looks like it's time to buy the euro. I just can't find any pairs. So I wouldn't do that simply to force myself into a hedged position. It makes sense. If it makes sense to buy the euro against something, then fine, and then your euro position is hedged. Then you'll be short the euro against the pound, but you'll be long the euro against something else, if it makes sense. But right now, just to do it for the sake of doing it, just to do it for the sake of hedging, I would not do that, okay? But if there were a currency pair out there where it made perfect sense to buy the euro against something else, something, not the pound, then that would be the trade that hedges your euro position. Or, since you are long the pound, a position that shorts the British pound would hedge your pound position. Again, it's kind of hard to find currency pairs where you'd like to short the British pound right now. But it could happen. But you might have to look really hard for that. Okay, another question. New Zealand increased the interest. This one comes from Singapore. Hello. Hello, Ted. Ed, I have a question. New Zealand raised the interest rates, but the central bank indicates that the currency is overvalued. So you think this will drive New Zealand into downtrend? Well, I don't think anything. I'm just telling you what happened. I still think, for example, okay, the question is, do you think Euro New Zealand is a retracement rather than a trend change? Yes. Yes, I do. This is still a downtrend. In other words, I don't think that what happened in New Zealand is going to change the trend of this currency pair. This is a downtrend. And this is a rally within that downtrend. And every rally within this downtrend has been shortable, has been a good time to sell short. Okay, so how does one do that? You could go to the hourly, let's say. Right? You could go to the 60-minute chart, and you could look for an overbought reading on RSI, for example. So let's pull up Relative Strength Index, RSI. See right there, that's a short signal right there. That one probably, that was a little early, didn't work. Here's a short signal right here. That's the high. It's telling you to short the high. If it gives another short signal, it might be worth a short. But that's a great question. I do not think what the central bank did changes the trend. I think it slammed New Zealand dollar down very hard. But in the end, it's just talk. Just because some guy says it's overvalued doesn't mean it's going to now turn around and go the other way, for the next 6 months. In fact, sooner or later, the market is going to kind of get over it, I think. But I don't know when. But I do think eventually the market just says, you know what? It's just one guy talking. And it really is. The head of the Reserve Bank of New Zealand, Mr. Wheeler. It's just one person. He's just one human being, right? Okay. I noticed that the Swiss franc and the euro are behaving similar since euro and Swiss are pegged. And yeah, we know that euro and Swiss barely move against each other, so they're very tightly related to each other. Do you think Swiss is still a risk-off currency? I would say not as much as before. Not as much as before. And a lot of it has to do with that peg. The fact is that peg does change the dynamic a little bit. Just remember that the Swiss franc is more liquid against the euro than it is against the dollar. Why? Because where is Switzerland? It's in the middle of Europe. So the euro is the more important countercurrency. That's why they did not intervene against U.S. dollar Swiss franc. They did not set a peg on U.S. dollar Swiss franc. They set a peg on euro Swiss franc. But you're correct. And Ted, I have to say, your observations are very keen. I think they're accurate. And not only that, you know, they're more than basic. They're actually, you know, somewhat advanced. So congratulations to you on that. A couple of good questions. So just to sum up, Euro New Zealand, I believe, is a retracement, not a trend change. And Swiss franc has probably lost some of its safe haven status because it is closely pegged to the euro. And the euro does not have safe haven status. Okay, great stuff. Wow. That's a lot of currency talk, folks. We haven't even talked about stocks yet. And there are a few things I want to tell you for my stock people out there. And first of all, I'll tell you what, one thing I'm going to do. Now my stock portfolio, if you're paying attention, I treat this a little bit differently than my currency portfolio. You see, currencies, each individual currency trade is very scripted, entry, stop, exit. Each individual stock trade, not as much, not necessarily, because they can be traded that way, or they can be traded as a portfolio, and that's what I've been doing. I've been trading them as a portfolio. Now, we've had some very good successes recently, and we've had a lot of big successes this year. But I got to tell you, we took one on the chin, and I'm not going to take it. I'm not going to sit here and hold this loss. I simply cannot do it. That stock is a stock that even last week I said I really like the story on this stock. But you know what? Story Shimori. This stock looks like it's going lower now. It got smashed, and now, after this latest smashing, what does it look like to you? I say, whoops, I say it is a bear flag, and I am not going to sit here and hold it. And I hear that voice inside. Again, I hear the voice saying, Ed, hang on, it'll come back up. And the beautiful thing is, we did two separate entries on this. This is what saves us. Okay, here's what saved us. Here, that's your, looks kind of like a bear flag. Let me tell you what saved us on this. We only bought half of it ahead of earnings and half after. So we bought approximately half the position at 70 and half the position at 65. So we're in at approximately 67.50. We're down $4 a share on this. I will not sit here and allow this. I will take the pain here, ladies and gentlemen. I will take the bullet. I am not going to sit here and watch this get worse. I am going to take $4 a share loss on CBI because this is the one that could kill me if I'm not careful. And I thought it was a great story, and I thought it was a misconception, but the market seems to disagree with me, and I'm not going to argue with the market. So I am taking a $4 a share loss on CBI. Now, before we go, oh my gosh, Ed took a big loss on CBI, Well, I'm going to close that long position, and I'm going to close another long position in Starbucks. Starbucks, which we bought on June 4th, which was here, at 74.5 on June 4th. We can now close Starbucks with a $4 per share gain. And so this sort of absolves my sins in CBI. And it also does what? It reduces my overall long position one more time, because you notice how we keep doing that. We get out over our skis a little bit, and then we reel it back in. Now we're still long. We're still net long, but we're a little bit less long. Every time we get close to this 2,000 number, I start to worry a little bit, so I'm reeling it in again, because we're 20 points away from 2,000 on the S&P 500. We still have plenty of long positions, and the one I'm happiest about and most proud of is Apple Computer, which hit 99 today, baby. Look at that Apple go. You know, we're up a bunch on Apple, and I am extremely happy. We've been holding it for a while. We did sell half at a big profit, but we're holding the other half at an even bigger profit. Oh, and we took profit on Amazon, and as of the prior session, we talked about Amazon getting out completely. Now that we're out completely, right? We dumped half somewhere around here, and we dumped the other half here, but we bought the whole thing at 310. So it looks to me like we made good money on this one too. That's gone. So we still have our Apple. Amazon's gone. Starbucks is gone. DF we're hanging on to because this is a different type of trade. I think one day it's going to get bought out at 25. We are still short Lululemon. It did pop up a little bit, but what's the trend, folks? What do you think the trend is? This is just like Euro New Zealand. I think this is a reaction within the downtrend. You know, I'm not worried about this. I don't think it's going anywhere. TJ Maxx, another short, my other short position. This also just looks like it wants to jump off a cliff. It looks horrible. I'm so happy that I'm short TJ Maxx and Lulu. Now, stocks that were long. Wells Fargo Corporation has done basically nothing for us. This might be the next one that I let go. ACT, we were up good on this. Now we're breaking even. Markets pulled back in the last few days. And let's not forget JCPenney. Gosh, I forget to mention JCPenney sometimes. JCPenney is quietly beginning to turn northbound. Remember, we talked about this a while ago. It's like, shh, don't tell anyone. Don't wake anyone up. But I got a funny feeling. See, everyone hates this stock so much that if it can just get over 10, it's at 922. If it could just get over 10, this is going to look an awful lot like an inverted head and shoulders breakout. If it gets over 10, I think it could hit 12, above 12, without too much trouble. 20%, more than 20% from current levels, actually. More like 30% from where we bought it. I love making 30% on a stock. Okay? And the only other position we have is gold, which has really done not a whole lot of anything here. We're down a little bit on gold. We're down a little bit, not a whole lot, but I'd rather be up than down, but nothing has changed my mind here. Sticking with the gold. Okay, so we got it. We're still long overall, but we're less long. No Amazon, no Starbucks, no CBI. We still have two shorts, and we have on the long side ACT, WFC, JCPenney, DF, and a half a position of Apple. So we're long a little more than 2-to-1 ratio before we get out like 3-to-1, 4-to-1, and then we reel it back in. We've reeled it back in a little bit again. And this way, if things do turn, we're not going to get caught out over our skis if things do turn around. Okay, ladies and gents, thank you so much for tuning in. And thank you for all your great questions and participation. I look forward to speaking to you again in just a couple of days. Until then, this has been Ed Ponzi. Thank you very much for listening. I'll talk to you again very, very soon. Take care.